Hi everyone, let's cover my Elliott wave scenarios on the 1 hour time frame on Bitcoin, starting with the move to the upside, which can be counted in two different ways. Either have a diagonal that is finished at the high, counted as a wave A or a wave 1. Then we look for a 3-wave retracement in a wave B or a wave 2. And then we want to see support holding, signs of strength, and price to move towards the upside in then a wave C or a wave 3. Now, generally, the minimum retracement target for a wave B or 2 is at least the 0.382 Fibonacci at 81.8K. Most common target is the 0.5 to the 0.786. But as you can see, we haven't even touched the 0.382. Price only retraced to the 0.236, which is a very rare retracement target for a wave 2 or a wave B. So preferably the bulls like to see a bit of a deeper retracement to the downside, and we do have some interesting support, especially down here, 78 and 77K. Now the other way to count this structure to the upside is as a finished double zigzag. So then you have a wave W with internally a zigzag, you have your wave X, and then you have another ABC to the upside, which is your wave Y. After a double zigzag to the upside, you don't want support to hold and price to move up. You are going to be looking for price to take out the double bottom at 74.5K. Now, in both of these scenarios, either a diagonal or the WXY, you would look for price to preferably move towards the downside first, and then depending on the support holding and the reaction that we get at support, you would look for price to move back towards the upside. Locally, there are two scenarios that we can put on the chart. First of all is the one that you see over here, where this is an impulse to the downside in A or 1. Then we have a double zigzag, a WXY in B or 2, and you look for an impulse to the downside. Now, yesterday I shortly covered this scenario, and a bit of a problem for this scenario is time, right? Because you can see that this high has been made after a 7 fib time compared to the move to the downside. So the fib time is taken from the start to the end of wave A or 1, comparing the move down with the sideways structure to the upside. This high, made after a 7 fib time, which also took the two highs over here, lowers the probabilities for an A or 1, B or 2, and a 3 or a C to the downside. But time is never an invalidation. It just affects the probabilities, and structure comes first. And when I woke up this morning and I looked at the chart, I was able to count quite simply a W here, then a wave X, and inside wave X you then have a flat X zigzag, so an internal WXY, and then another A, B, and then a 5-wave C towards the upside for a potential double zigzag. So therefore, this is your, I suppose, quote-unquote, bearish scenario, as you would look for an impulsive structure to the downside in either a wave C or a wave 3, even though this is very long in time, which is something that we do have to consider, of course. Now, something that would be more interesting for bulls is to continue ranging relatively sideways. So instead of getting a C or 3 to the downside, you are actually going to count this as a WXY. So this move to the downside is then impulsive, but it's counted as a wave C and then an ABC for a W structure. Your wave X is the double zigzag, WXY, and then you look for a wave Y, which can either be a flat structure, it can be a triangle, or it can be a zigzag to the downside. Common target for your wave Y starts with the 618 at 83.6K, all the way down to the 1.236 at 81.7K. And you can also see the vertical line on my chart here, which is a fib time that I took from this high to the low of W, comparing W with wave X in time. And you can see that wave X was made quite close to the 1 fib time. So from a time perspective, it does look a little bit nicer than the impulsive structure to the downside, but from a structural perspective, you count this exactly the same. So this is counted as either a B or a 2, and in a WXY scenario, right, this is counted as a wave X, but the sub-waves are exactly the same. And in both of the scenarios, of course, in a C or a 3 down, you look for price to move to the downside. And if you count it as a WXY, then preferably you also still look for a little bit more downside. And if we just look at the chart plain like completely blank, then you can see we have the initial structure to the upside, and then we start ranging sideways, right? So we are starting to curve, which also means it becomes a bit more interesting to look for retracements. And we know that the 0.236 is incredibly shallow. And we have been talking about retracements most of last week since price started ranging, of course. So therefore, keeping an eye on some of the support levels and these scenarios is interesting. And tomorrow the markets are open again after Easter, so we can wait and see what happens then. If we do look at the news here, quickly refresh the chart, see what's up next week. Then we do have on Thursday a little bit of news coming in, but that's the only thing really next week. So just be aware of the times here. This is Central European time zone, 2:30 p.m., 4 p.m. on Thursday. So if we then look at the probabilities, then in both cases, a diagonal or WXY, you preferably see a retracement to at least the 0.382 or deeper, 77, 78K, some nice areas of support. Observe the reaction, look for signs of strength in order for price to move to the upside and take the high. If price would move to the downside with consistent bearish CVD divergences, which basically means that market longs are being absorbed by limit short options, which you can see with this indicator over here. More about that in the description and pinned comment. Those are clear signs of weakness, and you got to be aware of potentially price taking out the lows in that case. Now, locally, from a time perspective, of course, this B or 2 would be incredibly long for A or 1. It is very rare for me to see a wave B or 2 that is 7 times longer than the A or 1, which is something that, of course, I consider with this particular scenario in comparison with the WXY, where X is about a 1-to-1 compared to your W. But in both cases, you still preferably look for a retracement to the downside in Y as well as C or 3. So one just waits for price to do its thing, preferably get a retracement and then take it from there. Levels to keep in mind, well, last week we have been keeping an eye on that daily naked point of control, which is in touch still at 82.6K. You can see there's a few levels above as well. Bit of a gap here till you eventually arrive at 78 to 77K. I do realize there is a point of, or a value area low over here at about 81.1K. So that is at least an area that I also keep in mind. And finally, I like to actually talk about a scenario which is a alternative scenario, which is that this is not yet finished. I just want to drop it in the video. And that would be ABCW. This is your X, and then another ABC in wave Y. The reason why this is very much an alternative scenario is because of time. So your wave W, right? You take a fib time from the start to the end of W to the end of your wave X. And currently your wave Y is over 3 times longer than your wave W in time. And it is approaching a 4 fib time. And you still need to get a C to the upside because this is wave A, this is then your B, and this is your C inside Y, right? So you're very likely going to finish wave Y at least after a 4 fib time if you would look for a WXY that's unfinished. And that starts to really impact probabilities negatively from a time perspective. The only reason why it could be interesting to at least keep in mind or have it in one of your folders is that in your wave Y, right? Again, you have your W, your X, and your Y, A, B, C, and Y. Your wave B then touched the 0.382. So if price would just move to the upside, right, without taking the lows, without really touching that bigger 382 that we take from the low to the high, then you have to realize that, well, in a double zigzag that's unfinished, your B here did touch the 0.382, which is a valid target for a B, and then the next leg up can be a C, grab the liquidity, and then you drop it to the downside to take out the lows, because a WXY, you look for price to eventually move down and take the lows. It would be very uncommon, again, for price to find support on a 0.236. There is 2 moments in the past where I have seen a wave 2 touch a 0.236, but the most common target, and in the end, that's the only thing you can use. It's probabilities, it's what's common, what's less common. The most common target for wave 2 or B is the 0.5786. Minimum target generally is the 0.382, and that is what we are looking for here locally. And just purely from a market structure perspective, move to the upside over here, right? Starting a sideways grind. You can see the curvature of the chart as well. So it becomes interesting to look for such retracements, as we've pretty much covered all of last week since the range began. And yeah, this is currently what I'm looking for. And if price would drop to the downside to support, I look for signs of strength, and then we take it from there. I hope this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.